Hey guys, so we are going to go over a live example on USD CAD on the daily time frame. Okay, so as we can see, we had a huge impulse up. We had a major resistance, then a push down, correction, push down, correction, push down, correction. So since we're at the correction phase, it kind of looks like we're going to, we could either break above structure and continue up. But since we're in this correction phase, I think we will have another push down. We had to keep in mind that this gap is open, so eventually this is going to get filled. So bringing it down to the 8 hour and the 4 hour, we can basically see that we had a massive impulse. The reason why we did is we had structure here on the left. So one hit, two hit, boom. So now what we're doing is we rejected from this level, so we're just going to draw a zone here. And for the colors, I'm just, it's a lot of time. So I like to get through the video as quick as I can because I like getting straight to the point. But what I do for the colors, as you've seen in all the videos, is I just change the top zone to green, the bottom zone to purple, or whatever candles or whatever colors you want to change the lows and highs to. It doesn't matter, but I just make it whatever color. Just so you don't get confused of what's support, what's resistance. But I mean, most of you are experienced and stuff like that, so you know it by just going through the videos, but I just want to make that clear. So for example, we have a rejection zone here. We had a correction off this level. So what's happening here is it's testing the structure right now. Okay. And so what we kind of are expecting is to see like if we can move up to structure or if we can break below. So there's always two scenarios, guys. There's always, okay, we're going to break below or we are going to move to the high. Okay. So let's just see what happens in this case. And this is how you backtest. Literally, you just go back in the market, rewind price action, and figure out your zones and then where we would take an entry, so on and so on. So let's just play back here. Okay, so now we're at so we jumped off this price, came up to here. Okay, so we have price around 141,500. Okay, so we can see that on the 1 hour time frame, we have a double top pattern. It's trying to exhaust. So if it doesn't break above this price, this is where we can take an entry. Okay, so as you can see, we tested structure, tested it one more time, came up, but came up for a fake out. So what that basically means is like the market makers know where you're entering, where you're exiting, where you're putting your stop loss, okay? So they can push the money where your stop loss is at to stop you out and make more money. So that's why like resistance and support zones are key. So when it comes to a resistance or support zone, especially like a major low or major high, the market makers know we're buying at that specific zone. So the market makers sold the market and took all that money since there is liquidity sitting below. So they basically manipulate the market and then sell it, and then they buy it up immediately after one like buys it basically. So for example, like if we bought it here, they're going to move it up, then they're going to completely reverse the market. So they got all those buy orders in and then they completely reverse it. So that's what we have to be mindful of when it comes up to that zone. It's not going to completely test that same number or that same price each time. It's going to go up and then it's going to fake you out and then it's going to reverse. So taking an entry off here, we could still take it at that 141.5 as long as this candle is closing below this zone. Like as soon as we see rejection, and then again when you're looking at the lower time frames, you can see, okay, it tried to break above. We're waiting for that retest, no retest, and it closes. So anywhere around here is where we could take the sell. So for example, we put a short position, 141,500. Since it's tested twice, came down, and then faked out, I mean, you can put the stop loss right above the fake out. In this case, this would be like a little tight stop. Because more than likely it's not going to come up there again because it faked out. So our first target basically is here. Okay, so let's see what happens. Right, so it hits our target and then breaks. So what we're looking at is, let's jump on the 8 hour. So we're looking at structure here. Okay, so in order for it to hit the second target, it needs to, we need to make sure this level breaks. So the second target would be this major low. Okay, so it retests structure, corrects back up to structure. So it tested here. Let's go on the lower time frame and make sure that was a test. Yeah, so it tested here, went down, but since it's been falling and since it had a huge impulse, it's going to correct, right? So there's a couple times it can test twice on the zone, or it can test once and go to the major low. So that's something you have to anticipate. So that's why it's so good to take it off major structure at the top, because then you won't get, if you get on this retest and then it corrects, you're kind of thinking, oh no, it might go up. But realistically what happened is, we look at chart patterns, huge M, double top, boom, impulse leg, correction up to this retest zone. So it tested once, twice, and then more than likely it's going to drop. Let's see. Okay, so this is a different story. And I'll explain in a second. Okay, so I said more than likely it's going to drop. So it kind of tested, but then there was no bearish momentum. So then it continued up, fake out, continued up once more, tested, continued up. Then we started getting exhaustion. And the reason for that is, if we look left, we have a minor zone. Okay, so what basically happened is, since this structure broke, it came up to test again, and then closed below. So it kind of made like a mini M pattern, and then it's trying to drop again. So sometimes that does happen. So then it's touching this low. Okay, and then it's starting to reverse back up. So that, again, that sometimes happens, and you have to be mindful. So since this target didn't hit here and it starts closing below, and then it made a fake out, but then we have another bullish, we have to keep in mind that, okay, it could come and test the top. It didn't, but basically what happening is it tested this leftist structure. Okay, so you got to keep in mind that scenario can happen sometimes, and it's because it had such a huge dump down that it just corrected all the way back up again, tested structure, and then dropped to the major low. So this is a scenario where you gotta not think with your emotions, you gotta watch what price action is telling you. So then let's see basically what happened next. Okay, so then tested this structure, came out, faked out, closed below. Here's another entry for a short. Okay, so then our target for here, let's say we took an entry here. Again, 1 hour shows you everything. So we had an M pattern test, we could even take it in here if you missed that. So then a stop loss right above structure, and then our target would be here, right, to this low. So right here, Again, like when you're looking at price, always round it, but I talk about that. So then looking at the higher time frame, we're seeing, okay, for our target to keep going, this would have to continue to break, right? So it comes up, doesn't fully retest structure, it just exhausts it right here. Okay. So it exhausted at around 138,200, closed below, and then continued to drop. So as long as there's no bullish momentum, as long as there's no bullish momentum like going above here, then we're good to go, right? So then you're looking on the higher time frames and you're saying, okay, where's my target? Well, it's trying to fill this gap right here. So this would be our first target. And then this would be our second target, like right in this zone right here. So let's just see. Wow, this tanked. Okay, so first target down here, which was 479 pips. Then if this broke, then we would extend it to the next low. So it broke, extend it to the next low. Okay, so what happened? Broke, tested, continued down. Remember, this is on the 8 hour, okay? So when you're just jumping down lower time frames, you're just getting that, just a clearer view, basically, with more candlesticks, like a precise. So it broke, tested, came up to test once more, came down. So now we're at this major target, which just this trade from that retest was 562 pips. If you would have held from that M all the way down, which is like a couple weeks for sure, that would have been, well, this would be our target. So 700 pips, and then 562 pips. So that's over 1,000 pips just in that one trade. So that's why swing trading is so powerful. But so what happened, went to this low, tried to break below. Here's a W pattern, double bottom. As soon as you see price reject, you want to draw a zone on it, because if it's closing below that specific price, in this case 133.8, and you can see that it's forming a pattern, look, W up, and then forms an M, and then goes down. Okay? So now it's going to try to like go a bit sideways because it's been moving for so long. So now it's literally just moving sideways. Okay, and so right here, basically what happened is we tried to come up and test structure. So right in this area. So I tried to test once, twice, went down. W, impulse, sideways, consolidation, back down to this. So it was just, when this stuff happens, like, you have to be really careful when it's not trending, because this comes down to like the impulse and correction thing too. When there's a massive movement in the market, it's going to move sideways like this. Okay. So then it eventually comes down. So basically what happens here is it tests price here, breaks, test structure on the left, as you can see. Test structure continues down to this low. Okay, so for it to keep going down, it needs to break. Okay, so then what ends up happening is test structure again, then what ends up happening, comes up, tests 1, 2, 3, down, comes back up and tests, and down. Like, it's just repeating itself every single time. And you gotta make sure that you're looking at the sessions, and you gotta backtest this, because it's really, really important. So for example, like this move, let's drop down to 1 hour. Okay, so let's zoom in a bit. So what ended up happening is this move came in London. So Asian pushed it up, London pushed it down for that pullback, and then New York gets in. New York brings it up. Okay, and then we have a correction. Then we have Asian session, London session brings it down, and then New York is just bringing it down, and so on for those couples of, or I guess this is on the 1 hour. Sorry. So what ends up happening is like New York brings it down, and then Asian comes in, London brings it up, New York brings it down, so on and so on. Okay. So looking on the higher time frames too, you can see what exactly is happening. So London brings it in, then comes Asian, brings it down, so on and so on. So again, you're looking at the days and times that this is happening. So it's really, really important that you back test, okay, this is 10 and this movement happened on this day at this time. And if you back test this over and over again, you'll start to get those certain moves. So, for example, like New York session, you could be like, oh, okay, well, London pushed this up to this major structure. Now, New York is going to come in and push it down to a better price that they want. You know what I mean? So, that's really, really important to do that. Okay, so let me know if you have any questions on this. I quickly just wanted to go over structure and how to do that. But yeah, here's just another example of it.